This video is powered by MyHeritage. Germany's industrial engine is slowing down. Factories are closing. More than 10,000 manufacturing jobs disappear every month. If you ask most politicians, the biggest threat to Europe's economy is America.
President Trump's announcement of universal tariffs is a major blow to the world economy.
But while Europe is looking west, something far, far bigger is quietly happening in the east. China's factories are producing more than ever. But how does that make any sense? Isn't China's economy supposed to be slowing down? A property crisis, weak consumer spending, youth unemployment. Most headlines tell us the Chinese economy is struggling. So why are Chinese exports breaking records? What actually changed? And most importantly, can Europe stop it? To answer these questions, I started digging. You know, the usual trade databases, Eurostat, which, oh my god, is quite difficult to use, OECD reports, and long European Commission papers. And I did this until I stumbled upon one really simple graph, really. As these bars right here show everything that Europe sells to China every year. And these bars here show everything that China sells to Europe. And as you can see, China has long sold Europe more than Europe has sold China. And for a very long time, things barely changed. Europe literally imported roughly 150 billion euros more in goods from China than, it exported back, which is what is called a trade deficit. It wasn't balanced, but it was relatively stable. And for many years, that wasn't really a problem. Europe bought cheap manufactured goods from China, while China bought high-end machinery. You know, the cars, the luxury goods from Europe. But then, watch what happens. In just 4 years, that gap almost tripled to a deficit of well over 350 billion euros. And I remember just looking at this graph and thinking, this can't be right. Trade deficits don't just triple in a few years. Something must have changed. And to understand what and why this is really so detrimental to our continent, we have to go back 20 years. China was changing, and millions of people were leaving farms and moving to cities. New factories were opening almost overnight. The country had something that the rest of the world desperately wanted: cheap labor. Lots of it. And in 2001, when China joined the World Trade Organization, suddenly it became so much easier for companies around the entire world to manufacture in China and sell those products globally. And before long, Chinese-made clothes, toys, furniture, and electronics were seen across shops across the world. And the effects really were enormous.
The Detroit industrial community, each one of these components is manufactured in the Detroit area. High industrial production creates the nation's wealth.
In the United States alone, more than 2 million manufacturing jobs disappeared as factories struggled to compete with a flood of cheaper imports. There's literally ghost towns, empty factories, and entire areas of the US which are now uninhabited. Economists later called this China Shock 1.0. But in Europe, the story is rather different. Germany, for example, wasn't really selling t-shirts. It was selling the machines that made the t-shirts. And as you all know, not just the machines. Chemicals, of course, industrial equipment, and of course, the famous German cars. China was becoming Germany's biggest customer. And for many European economies, China's rise wasn't really a threat. It was more of an opportunity. And you can see this so clearly in the data. Because after China joined the WTO, Germany's exports to China kept climbing. Higher and higher, and even higher still. By 2016, they had increased fivefold as a share of Germany's total economy. Even after the infamous Volkswagen diesel scandal briefly knocked exports, they pretty much soon recovered and reached even newer, higher highs. And nowhere, of course, was this more obvious than in Germany's car industry. Mercedes-Benz, record year in 2011, again in 2013, again in 2015, and in 2016. Porsche, 5 consecutive record years in a row. BMW, record after record after record. And Volkswagen, the same story. China had become the engine driving Germany's industrial success. And it really did look like a perfect win-win.
On proof points of how far we have come with our fully localized strategy, and I can tell you, we are very proud of it.
But, and this is the important part, while Germany and much of Europe was, well, celebrating, China was building a plan. And that plan started with one very simple question. How do you catch up with countries that are decades ahead of you? The answer is, you learn from them. But first, a quick word from our sponsor, because a few weeks ago I took a DNA test with MyHeritage, and it was actually really fun seeing the results.
Whoa. 78% Netherlands. 8.6% England. Oh my god. 4.8% German. Bam. Oh, look at the map. It's pretty cool.
But since then, the results have become, I would say, even more interesting. Because one of the coolest things about MyHeritage is that your results keep growing over time as more people join the database. I mean, right now, I already have more than 8,500 DNA matches. And I have to say, some of them are actually kind of close relatives. I even showed the results to my family. And now everyone's trying to figure out where different parts of our family history are coming from. With these family trees, for example. And then there's so many really cool features. There's Ancient Origins that traces your ancestry back thousands of years. And according to my results, my genetic profile is surprisingly close to Beethoven's, which is now officially my claim to fame. The DNA trace feature is fun as well, as it predicts characteristics based on your DNA. Apparently, I'm less sensitive to bitter tastes, have normal tolerance to chili peppers, and score quite highly on creativity. Anyway, right now, with my code EU2, you can get the MyHeritage DNA kit for just €19. That also includes free shipping, a 30-day free trial, access to Ancient Origins, DNA traits, DNA matches, and a range of additional family history features. So, if you'd like to discover more about your own family history, do check out MyHeritage through the link in the description below or in the pinned comment. Now, back to the video. And phase 1 of China's grand plan. Because China really had a remarkably smart strategy. If foreign companies wanted access to China's booming market, they had to partner with a Chinese local company. And in the auto industry, that often meant a 50-50 joint venture. I actually saw this firsthand myself, because back in 2012, I spent 6 months in Beijing as an intern at Mercedes-Benz. And Mercedes wasn't operating alone here. It was part of a joint venture with BAIC. And we were definitely in contact with them so regularly. And the same concept applied to BMW and Volkswagen. In fact, the same model was repeated across most strategic sectors throughout China's economy. And over the course of just 15 years, China absorbed industrial know-how that had taken many European companies generations to develop. But of course, expertise alone doesn't build a world-class manufacturing industry. You also need enormous amounts of capital. And that's where phase 2 began. Now, what really blew my mind is this document right here, Made in China 2025. It was written in 2015, and it's not some secret government memo or something leaked from the Chinese leadership. It literally says what China is going to do. And right on the first page, right here we have it. We will strive to transform China into the global manufacturing leader. The global manufacturing leader, not a global manufacturing leader. And if we go to page number, I think it was number 22, it shows you exactly which industries China is interested in and wants to focus on. I mean, right over here we have next generation IT. Here we have communication equipment. And if we go a little bit further, right over here, we have electric power equipment and energy efficient and new automobiles. Hello, Germany, wake up, it's right here. And if we're talking about how we want to do this, we can go further to page 33, and it shows exactly the strategy China wants to take. Financial support policies, and of course, fiscal and taxation policy. What does that shout, everyone? That shouts subsidies. And it means subsidies because only a couple of years after this document, China launched another program. It was called Little Giant Enterprises. And what it does is it chooses thousands, actually tens of thousands of companies over the last couple of years that China supports and puts money into, creating unfair competition. And who are they competing with? Well, everyone around the world, but especially Germany's famous Mittelstand, the highly innovative network of medium-sized industrial companies that has pretty much powered Germany's manufacturing success for decades. So by this point, China has completed the first two phases. Phase 1, learn the know-how. And phase 2, produce and back it up with money. Lots of money. Which now brings us to the third and final phase. Now, you might remember the headlines in 2021. China's property market is collapsing. Newspapers everywhere compared it to the Lehman Brothers. And the problem was very simple. The Chinese consumers had stopped spending altogether. The property crash shattered confidence, and because China's welfare state was and still is much less generous than Europe's, households were saving around 31% of their income to prepare for things like retirement, healthcare, and other emergencies. And for many people, this housing crash looked like the beginning of the end. The Chinese miracle was over. Or at least, that's what everyone thought. Now, normally, a government facing weak consumer demand would try to get people spending again. You know, stimulate the economy. But Beijing did the exact opposite. It completely doubled down on manufacturing, which meant that state-owned banks kept lending and local governments kept supporting industry. More factories, more production, more and more capacity. But of course, there was one obvious problem. If the Chinese consumers weren't buying all of these goods, who would? The answer? The rest of the world. And that's where this incredibly vicious cycle begins. More Chinese exports meant more euros, more dollars, more foreign money flowing right into China. And in normal economies, that would push China's currency higher. A stronger currency would then make exports more expensive, slowing down the export boom. But once again, Beijing had another idea. Instead of letting the renminbi rise, China's central bank bought those euros and dollars by creating new renminbi in return. And that kept the currency artificially low, which meant cheaper Chinese exports. And that very cycle just repeats itself. More exports, more foreign money, more state intervention, more factories, more production, and once again, more exports. Again and again and over again. I think you get the idea here. And yeah, the results, just have a look at this. The graph says it all. Since 2021, Chinese exports have just exploded, especially cars. And today, around 1 million Chinese-built cars arrive in Europe every year. Think about that. That's more than 2,500 cars every single day. And if we compare that to Europe, you get such a bleak picture. At its peak, Europe exported around 400,000 cars to China every year. Today, that's only 160,000. That's tens of billions of euros in lost exports every single year. And just think about what that means for our companies, for Volkswagen, for Mercedes-Benz, for BMW, or the thousands of suppliers making everything from gearboxes to brakes, and for the millions of Europeans whose very livelihoods depend on manufacturing. And yeah, it goes without saying, it's not just cars in Germany. The same pattern is emerging across industry after industry after industry. European exports to China are falling everywhere, and so are US exports. And at the very same time, Chinese exports keep rising to Europe and of course to the world. And yeah, all of that brings us back right to where we started. The unsustainable trade deficit that Europe has with China today. In other words, Europe now buys around 1 billion euros more goods from China than China from Europe every single day. Guys, this really isn't just another trade imbalance. It is a perfectly executed three-phase plan that now is a fundamental existential threat to Europe's entire economy. And that is what economists today call China Shock 2.0. So, this has been a pretty gloomy video so far, and it raises the question whether Europe is actually doomed. And the answer is not yet, but it does really have to act. And this report from the Center of European Reform makes some really solid proposals. Firstly, Europe really needs some better tools to defend itself, because right now, Europe literally responds to China product by product. And that's because of the European Union's trade rules. Europe pretty much has to investigate every single product separately before imposing tariffs. And that really is the wrong way to think about the problem. I mean, you remember the Made in China 2025 strategy? Beijing didn't identify 10 separate products it wanted to dominate the world with. It identified 10 strategic entire industries. And Europe needs to do more of that and then protect those industries. But of course, this also leads to very, very big challenges. Because China isn't just going to sit back and accept all of this. If Europe raises tariffs, China will almost certainly retaliate. And they will likely do this so strategically by targeting European weaknesses. And weaknesses means targeting individual countries to try and create division. Maybe Germany, maybe the Netherlands, maybe France, Finland, Sweden, whatever. And thereby trying to split the continent politically, which sadly works so well. And that's exactly why Europe has to do something else. It has to create a common compensation fund, financed by the tariff revenues that we talked about in our first point. Because when then one country gets hit or one industry becomes the target of Chinese retaliation, this fund, which is financed by the whole of Europe, can help carry the burden and subsidize that very industry and country that's being targeted. And yeah, ultimately, that's what this entire story is about. Us Europeans, our politicians, all of us, we're so focused on Trump and Putin, which is also correct, by the way. But we are forgetting the competitor in the Far East, who's arguably the biggest cause of our weak economy. So, let's wake the hell up and finally take China Shock 2.0 seriously. Because if we don't, the factories closing today may only be the start of our economic decline. Thank you so much for watching. And make sure you do check out MyHeritage's DNA kit if you want to discover where your roots are really from. Through my link in the description, you can get the kit for just 19 euros, which honestly is an incredible deal. And as always, a very special shout out to all of our presidents and further Patreons. You make all of this possible. Your support is awesome, and thank you, and see you in the next video.